Crypto explained for beginners, how it works. Confused by crypto? Let's fix that in 20 minutes. So you've heard of Bitcoin, Ethereum, maybe even NFTs. But every time someone mentions crypto, it feels like a different language? You're not alone, and that's exactly why this video exists. In the next 30 minutes, we'll break down exactly how cryptocurrency works, from blockchain and wallets to smart contracts, gas fees, and more. No jargon. No hype. Just a simple, beginner-friendly guide that finally makes crypto click. By the end of this video, you'll understand how crypto works, and why it's reshaping everything from money to the internet. Let's dive in. Let's be real. Crypto sounds complicated because it's full of new terms, tech, and ideas. Most beginners get overwhelmed by blockchain this, token that. Wallets, seed phrases, gas fees. Coins, tokens, altcoins, stablecoins. DeFi, NFTs, dApps, L2S. But here's the truth, it's not that hard once you understand the big picture. Crypto is just digital money on a digital network, built in a way that removes middlemen and gives power back to users. Once you see how the pieces fit together, everything makes sense. Cryptocurrency is digital money that you can send to anyone, anywhere, without a bank. It lives on a system called blockchain, which is a digital ledger spread across thousands of computers. Instead of trusting a company like PayPal or Visa, you trust the network and the math behind it. It's global, it's borderless, it's peer-to-peer, and most importantly, it's decentralized. Which means no one can control it, shut it down, or change the rules just because they're in power. So how does it actually work? Enter blockchain, the engine that powers every crypto transaction. Imagine a notebook that's shared across the internet. Every time someone sends or receives crypto, that transaction gets written into the notebook. Once recorded, it can't be changed or deleted. Each batch of transactions is grouped into a block. And those blocks are linked together, creating a chain. This public, tamper-proof history of transactions is what gives blockchain its power. It removes the need for trust. Because the truth is visible to everyone. When we say trustless, it doesn't mean you can't trust the system. It means you don't need to trust anyone. With banks, you trust they'll protect your money. With crypto, the system does that for you. Thanks to cryptography, transparency, and decentralization, no single person or company can lie or cheat. Everything is verified by the network. That's why many people see blockchain as the future of finance, identity, and even governance. It's not just a new way to pay, it's a new way to trust. A crypto wallet is your gateway to the blockchain. But it doesn't store coins like a physical wallet. Instead, it stores your private keys, the passwords that let you access and control your crypto. There are two types. Hot wallets, apps or browser extensions like MetaMask, Trust Wallet, or Coinbase Wallet. Easy to use, but connected to the internet. Cold wallets, hardware devices like Ledger or Trezor. They stay offline, making them much safer from hackers. When you make a transaction, your wallet uses your private key to sign it. If you lose your key or your seed phrase, your crypto is gone forever. So treat your wallet like a vault, and never share your key with anyone. Let's say you want to send Ethereum to a friend. Here's what happens. You open your wallet and hit send. You enter their wallet address. You specify the amount. You pay a network fee, also called gas. The transaction is signed with your private key. It gets sent to the blockchain and added to the next block. The network confirms it, and it's done. No banks. No approval delays. No middlemen. It's fast, transparent, and borderless. You've probably heard about gas fees, especially with Ethereum. Gas fees are the small payments users make to process and confirm transactions on a blockchain. They're not optional, they pay the miners or validators who secure the network. Why do they exist? Because they prevent spam and ensure that the network stays safe. On blockchains like Ethereum, gas fees fluctuate based on network congestion, just like surge pricing with Uber. Newer blockchains like Solana or Avalanche have much lower fees, which makes them great for beginners or daily use. In crypto, people often use coins and tokens interchangeably, but they're different. A coin is the native currency of a blockchain. Example: BTC on Bitcoin, ETH on Ethereum, Sol on Solana. A token is a digital asset built on top of another blockchain. Example: USDT, Tether, or SHIB, Shiba Inu, are tokens built on Ethereum. Think of coins as the fuel for the system, and tokens as tools, assets, or apps that live inside that system. Some tokens represent art, NFTs, others act as governance tools, and some can even be used in games or lending protocols. While Bitcoin is the OG of crypto, Ethereum is the platform that really brought crypto to life. Launched in 2015, Ethereum introduced something new: smart contracts, self-executing code that runs on the blockchain. This changed everything. Now, instead of just sending money, you could build decentralized applications, DApps. Things like Uniswap, a decentralized exchange, OpenSea, an NFT marketplace, Aave, a lending platform. Ethereum became the foundation of Web3, a user-owned internet. And while it used to rely on energy-intensive mining, Ethereum now runs on proof of stake, making it more energy efficient and scalable. Smart contracts are digital agreements that automatically execute when certain conditions are met. Let's say you hire someone to build your website. You both agree to a smart contract that says, if the files are uploaded by Friday, pay them 0.5 ETH. Once the contract sees that the files were uploaded, it automatically sends the payment. No middleman. No dispute. Smart contracts are the building blocks of DeFi, NFTs, DAOs, and almost everything in Web3. They're not just code. They're code you can trust. DeFi equals decentralized finance. It's like recreating traditional finance, without banks or intermediaries. In DeFi, you can lend crypto and earn interest, borrow against your assets, swap tokens instantly, earn yield through liquidity pools, all using smart contracts, not paperwork or credit checks. Platforms like Aave, Compound, and Uniswap make it possible for anyone with a wallet to participate in a global financial system, directly from their phone. But with great freedom comes great responsibility. DeFi is powerful, but it's not insured like your bank. Always use trusted platforms and understand the risks. Still thinking crypto is just for trading? Think again. Here are real-world ways people are using crypto. Remittances, migrant workers sending money home with minimal fees. Payments, small businesses accepting Bitcoin or stablecoins. Play-to-earn games, players earning real value in blockchain games. NFT collectibles, artists and creators selling digital art. Supply chains, verifying product origin and shipping data. Tokenized assets, real estate, stocks, and even fine art becoming tradable on-chain. Crypto is evolving fast, and use cases are spreading across every industry. Crypto is famously volatile. But what if you want to store value without wild price swings? That's where stablecoins come in. Stablecoins are digital tokens pegged to the value of a real-world asset, usually the US dollar. So 1 USDT or 1 USDC equals $1, in theory. They're used to move money between exchanges, avoid volatility, earn yield in DeFi, and pay for services. The most popular ones are USDT, Tether, USDC, Circle, DAI, decentralized. They're essential for crypto's day-to-day ecosystem, but they're not risk-free. Always understand what's backing them. If Bitcoin works, why are there thousands of other coins? Because each crypto solves a different problem or takes a different approach. Bitcoin, store of value. Ethereum, smart contract platform. Solana, speed and low fees. Chainlink, real-world data feeds for smart contracts. Filecoin, decentralized data storage. XRP, cross-border payments. Monero, privacy-focused transactions. Doge, meme-based fun and tipping. Crypto is like the App Store in 2010, some of these projects will disappear, but a few will change the world. Bitcoin is often called digital gold, but what does that actually mean? Unlike regular money, Bitcoin has a fixed supply, only 21 million will ever exist. That makes it scarce, like gold. And since no one controls it, not banks, not governments, it's also resistant to censorship. People use Bitcoin for long-term investing, aka hodling, protecting wealth from inflation, sending money globally without banks, saving in countries with failing currencies. It's not perfect for daily payments yet, but as the network scales, that could change. More than a currency, Bitcoin is a monetary revolution, a way to store value outside the traditional system. Blockchains need a way to agree on which transactions are valid. That's called consensus, and there are two main systems. Proof of work, POW, used by Bitcoin. Computers, miners, solve complex puzzles to secure the network. Pros, extremely secure. Cons, energy intensive. Proof of stake, POS, used by Ethereum and many others. Validators are chosen based on how much crypto they stake. Pros, more eco-friendly, faster, cheaper. Cons, some say it's less decentralized. Both systems aim to achieve the same thing, keep the blockchain secure, fair, and decentralized. A DApp is like a normal app, but it runs on a blockchain, not a central server. Examples include Uniswap, a decentralized exchange, swap tokens, OpenSea, NFT marketplace, Aave, borrow and lend crypto, Mirror, publish blogs on the blockchain. Instead of logging in with Google, you connect your wallet. And instead of trusting a company, the rules are built into smart contracts. It's a new way to interact online, one where you control your identity, data, and assets. A DAO is like a digital co-op or crypto-native company. There's no CEO, no boardroom, just smart contracts and community votes. Members use governance tokens to vote on proposals. Should we fund this project? Should we change our roadmap? Who should be hired? DAOs manage treasuries, fund public goods, invest in startups, and even run entire protocols. It's a radically transparent, user-owned model of organization, and it's gaining traction fast. A crypto exchange is where you buy, sell, and swap cryptocurrencies. There are two main types. Centralized exchanges, CEXs, like Coinbase, Binance, Kraken. User-friendly. Great for beginners. You don't fully control your crypto unless you withdraw it. Decentralized exchanges, DEXs, like Uniswap, PancakeSwap. No sign-ups. You trade directly from your wallet. You stay in control, but need to understand how wallets and gas fees work. Most beginners start with CEXs, then explore DEXs as they learn. Even if you're not a trader, it helps to understand crypto price charts. Here's the basics. Candlesticks show price over time, each candle equals 1 hour, 1 day, etc. Green candle equals price went up. Red candle equals price went down. Volume bars equals how much was traded. Support and resistance equals price levels where buyers or sellers are strong. You don't need to master charts to invest. But knowing how to spot trends, patterns, or breakouts gives you an edge. Crypto prices move fast, sometimes up 50% in a week, or down 40% in a day. Why? It's a young market. There's no regulation buffer. It trades 24/7, globally. Emotions, FOMO and panic, move the market. Whale trades, big money moves, can shift prices. Volatility equals risk plus opportunity. Smart investors zoom out and focus on long-term trends, not short-term noise. Want to protect yourself? Then avoid these common traps. Buying coins just because they're trending. FOMOing into pump and dumps. Falling for giveaway scams or fake support. Forgetting your seed phrase. Sending coins to the wrong network, RIP. Not taking profits on winning trades. Investing more than you can afford to lose. Crypto rewards the patient, the curious, and the careful. Yes, You can start your crypto journey with just £10. Here's how. Choose a trusted exchange, for example, Coinbase, Bitstamp, Kraken. Verify your identity. Deposit a small amount. Buy a bit of Bitcoin or Ethereum. Transfer it to a wallet like MetaMask. Explore, maybe connect to a dApp or just hold and learn. You don't need to go all in. Start small. Learn. Test. Then grow. Web3 is the decentralized internet, built on blockchains, powered by crypto. Unlike Web2, where big tech owns everything, Web3 lets you own your data, earn from your participation, govern the apps you use, log in with your wallet, not an email, hold digital assets that you truly own. Whether it's finance, gaming, art, or social media, Web3 puts you in control. It's not the future. It's already happening. Security is everything in crypto. Unlike banks, you are responsible for protecting your money. Here's how to stay safe. Use strong, unique passwords. Enable 2FA on all exchanges and wallets. Write down your seed phrase and store it offline. Never share your private keys or seed, ever. Double-check URLs before logging into exchanges or wallets. Consider getting a hardware wallet for long-term storage. In crypto, your wallet is your vault, and there are no customer service refunds. The metaverse is a virtual world where users can interact, work, play, and trade, often using crypto and NFTs. It's not just about VR goggles or gaming, it's about ownership and identity. In metaverse projects like Decentraland, The Sandbox, or Otherside, users can buy virtual land, customize avatars, earn crypto by playing games or creating content, attend virtual events with real rewards. Crypto powers the metaverse economy, giving value to digital items through scarcity, proof of ownership, and tradability. NFTs, non-fungible tokens, are digital certificates of ownership for art, music, collectibles, or even access passes. Unlike Bitcoin, where every coin is the same, each NFT is unique. You can own a piece of digital art, buy and sell on marketplaces like OpenSea, use NFTs as in-game items, tickets, or proof of membership. NFTs are more than images, they're programmable, tradable assets that live on the blockchain. Just remember, not all NFTs are valuable, and the market is speculative. Do your research. Tokenization means turning physical assets, like real estate, stocks, or even gold, into digital tokens on the blockchain. Imagine owning 1% of a building in New York, traded like a stock. Or buying a fraction of a Picasso. Or investing in a bond on-chain. Benefits include 24/7 trading, global access, lower fees, transparency. Projects like Polymesh, Ondo, and Relio are leading this movement, bringing trillions in real-world value onto the blockchain. Central bank digital currencies, CBDCs, are digital versions of fiat money, like a digital pound or digital dollar. Unlike Bitcoin, they are centralized, controlled by governments, programmable for policy enforcement. Why launch them? To modernize payments. To compete with stablecoins and crypto. To retain control over monetary systems. Some fear they could lead to financial surveillance or restricted spending. Others see them as progress. Crypto and CBDCs may coexist, but they represent very different visions of digital money. In 2021, people said crypto was hype. In 2022, they said it was dead. In 2023, the builders kept building. Now in 2025, crypto is everywhere. Major companies integrating Web3 wallets. Banks offering crypto custody. Countries regulating stablecoins. Real estate and stocks moving on-chain. This isn't a fad, it's a global technology shift. Like the early internet, crypto is evolving fast, and those who learn now are ahead of the curve. Let's be honest, yes, people have made millions with crypto. But most don't. Why? They chase hype. They invest without understanding. They get greedy. They fall for scams. The ones who succeed learn before they invest, diversify, think long-term, Take profits, stay humble. There's no shortcut. But with time, patience, and knowledge, you can absolutely build real wealth in crypto. You don't need thousands to start. Here's a beginner strategy. Start with Bitcoin, low risk, high trust. Add Ethereum, Web3 exposure. Consider a few altcoins you understand. Don't forget stablecoins, for yield or protection. Store in a safe wallet. Review monthly, not daily. Example with £100, £50 BTC, £30 ETH, £10 altcoin, £10 USDC. You're now diversified and learning as you go. Don't get lost in Twitter hype or TikTok FOMO. Stick with quality. CoinGecko, CoinMarketCap, price and project tracking. DeFi Llama, DeFi Analytics. CryptoPulse, YouTube deep dives and explainers. Bankless, The Defiant, newsletters and podcasts. Masari, Token Terminal, pro-level research. Reddit, Crypto Twitter, community vibes, but fact check. Never stop learning. Crypto rewards curiosity. Crypto isn't just about coins. It's about rebuilding trust in a digital world. About owning your money, identity, and data. If this video helped you finally understand how crypto works, then you're already ahead of 99% of people. Don't stop now. Subscribe to CryptoPulse for clear, honest, beginner-friendly crypto content every week. Got questions? Drop them in the comments. And check out our next video, How to Buy Crypto Step by Step, UK version 2025. See you there.